Welcome back to Fast Market, everybody. Kevin Hinks back here with my co-host Nathan Peterson. Now it's time for our cash tag segment. For that, we bring in the co-founder of LikeFolio.com, Mr. Landon Swan. Three dudes talking about Lululemon, Landon. That's the way we roll here. You know, this company, I love the comments by their CEO recently. He said, we run a full-price business, Landon. He said, we don't discount, we don't have promotions, and we have no intention to do so in the future. He likes his product, Landon, and apparently so does everybody else.
Yeah, it's a great product. And, you know, yeah, we're three dudes, but Lulu's has a lot of sales to men. I mean, right. I remember just not that long ago, you know, a few years ago when I first got my hands on something, I was like, all right, this is a brand that I can get behind. It's very good. It's very high quality stuff. But when we look at it, you know, we always talk about headwinds and tailwinds. One of the sort of tailwinds that they've got right now is high-end retail. When people are talking about high-end clothing apparel, that's up about 37% year over year versus just shopping for clothes is down about 32% on a year over year basis. So they've got a tailwind going there for sure. And we actually see kind of two sides of the data. When we look at web traffic data, for example, we're seeing a pretty strong numbers coming out of the, you know, people that actually go to the websites, up about 20% on a year-over-year basis. Now that was up about 33% last quarter, so it's starting to, you know, slow down a little bit, and you can see some spikes in there. But yeah, it's up on a year-over-year basis, and if you smooth that out, that's a 90-day moving average. If you smooth that out, you would see a very clear uptrend on like a one-year moving average. So that's the good news. The website's doing better. It's getting more visitors. When we talk about purchase intent on social media, consumer demand, people talking about the products, talking about buying them, wearing them, that is down a little bit, just barely. It's down about 3% on a year-over-year basis. And you know, you can kind of actually see the same dates on spikes there, but down just a little bit. This is actually one that, you know, I talked about the high-end retail. In October, we put a report out that talked about how the high-end retailers are going to win in an inflationary environment. We featured Lulu back on that report. The stock's up 16% since then today, but if you looked about a month ago, it was up even more. I mean, it was up another 13%, but we're starting to fill the gap that they created in that last quarterly report when they raised guidance and beat. So they jumped from, I think, 320 to 360, but now we're sort of falling back in the middle of that zone and starting to fill the gap on the downside. So we've got some mixed signal on Lulu, just sort of overall. But, you know, we do know that long term, I love that they've got this high-end retail as a tailwind helping them. And just like your comment said, I love the fact that they are going for full price. They know they're high quality, and they know that people are willing to pay it. So long term, I do like this company.
Hey, Landon, Nate here. Thanks for joining. So when I look at some of the environment for the consumer, even the high-end retailer, if you look at the likes of Capri and their report earlier today, you look at the likes of Nike and what's going on with that chart and some of the weakness that analysts cited over in China and giving them a sell rating. My question with Lululemon is, it is a fantastic brand, but I'm thinking, are we going to see signs that the high-end retailer is taking a hit, and that perhaps internationally might be really important in terms of China and also what's going over in Europe in terms of sales for Lululemon there, because that's a potential there for growth prospects there in China. Have you seen any indication of what's going on with the China consumer or overseas versus the U.S.?
No, so most of our data is focused on U.S., including even the website data. But, you know, I would definitely agree with you. I think that's a concern. And just like I talked about, even in the web data and the purchase intent consumer demand data that we see, it is slowing. So the purchase intent's down 3% year over year, but it was not that. It was better than that a quarter ago. And the web traffic data was plus 33% a quarter ago. Now it's plus 20. So it's moving in the wrong direction. We also see a little bit of happiness concern. I think that it's mostly kind of a political nature, that we've got that story where the employees were fired for confronting shoplifters. That gave them a little bit of a hit to happiness, but I don't think that's a long-term concern for the company. They are about 73%, a couple of points above Athleta. but far behind a company like Ralph Lauren. So they're actually about 14 points behind them. So overall, I think they have a strong consumer base, but we are concerned that there's a little bit of steam being let out of this high-end retail. Like I talked about, that was an October report that we put out, and we were very bullish on it then. But now it's starting to sort of pull back, and all the numbers are starting to reverse. So yeah, we're definitely leaning more towards the neutral side right now. As far as the earnings report goes, we've got a -7 score. Pretty much a neutral score. I think if they do sell off at all, it could be an opportunity maybe in a few months to pick them up. Right now, I'm not an investor, but long term, I do like them.
Yeah, Landon, the brand is strong. The following is almost cult-like. Some of the numbers, their gross margins, 55%, adjusted operating margins, 28.3%. Both of those better than Nike. This is a company, but, we have to pay attention. It gapped after the last earnings, but boy, you mentioned the first thing you said. It sold off about $60 here in the last couple weeks. Very heavy. Is that all backlash from this problem with the employees? Because if that is the case, that's a reason to buy the stock, Landon.
Yeah, I don't think it is. I mean, you're seeing, I'm watching companies like InBev, Bud Light stuff, all the Target stuff. Those companies are selling off, and I think a lot of it is backlash. But I think that I think it's a different scenario. I think it was a one-time event. It's not a corporate, ongoing thing. So I don't think that that's why they're selling off. I think that, this is a situation where really the brand is losing just a little bit of steam. Like I talked about, all the metrics that we track were better a quarter ago than they are today. Even though they're not bad, they're definitely losing steam. And if you think about, that last report, they went from 320 to 360, a big gap up, not just because they beat, but because they raised guidance. And so once you raise those expectations, in order to maintain that very high stock price, you've got to keep hitting those raised expectations. And I think that, maybe the word's starting to get out that that's less likely than I think they were a month or two ago. And we always say gaps fill, and we're starting to fill this one. So we'll see if we get all the way back down to 320. We're not that far from it here, just a few percentage points. It would be interesting to see if that does fill all the way. But I don't think, Kevin, to answer your question, I don't think that story about the shoplifters and the employees being fired is all related to the stock price, is what's driving the stock price. I think that there's more about expectations and their inability to meet that raised guidance going forward.
Yeah, because that is a hefty drop in the stock price. Landon Swan, co-founder of LikeFolio.com. Thanks for coming on, as always, spending some time with us. Have a great day, Landon.
Thanks, guys. Appreciate it.
Nathan, you got a